You told investors a week ago that the macro backdrop is extraordinarily challenging. What are the troubles that you see for the economy ahead?
Well, I think that what's most challenging is the cross currents. So you can certainly identify a lot of negative impulses, and a lot of us find ourselves talking, into those negative impulses and kind of getting more worried. But there's likewise a lot of positive impulses, and I think the fact that there's all this cross current, this is the best predicted recession that hasn't happened yet, and may not happen. So we're dealing with a lot of cross currents in our business. That can tend to make clients sit a little bit more in their hands and be a little bit more muted about their positioning and their activity levels. We obviously have tougher capital markets environment. It hasn't been as robust as we saw coming out of the pandemic recovery period. And so what I'm really reflecting in those comments is more about the activity levels and the cross currents and the continued debate about will we or will we not have a recession? Will we or will we not have rates that stay higher longer, inflation that stays higher longer? And until we get more resolution on that debate, I think we're going to be in a much more challenging period. I can see scenarios where the second half of the year gets a lot better. We obviously got through the debt ceiling. So last week when I was making those comments, we were on the precipice of getting through the debt ceiling. We've gotten through it. That definitely created, the lead up to the debt ceiling debate created a lot of angst and caution in the market for good reasons. We're now through that, so that's an obstacle that's been moved aside. Now I think really we get back to the primary debate, which is, to me, is inflation. When I talk to our clients, whether they're corporate clients or investing clients, the single biggest debate that I hear is how sticky will it be, and how much is the Fed or the ECB going to have to do to get it down to, its 2% target in the U.S. terms, let's say, or thereabouts in European terms. And I think that's a very hard question to answer, and I'm not even sure the Fed at this point understands where that has to be. And I think that debate is going to persist, and it's going to really weigh on sentiment.